Good morning, everyone. Happy Tuesday to you, wherever this stream finds you. As always, hope you're doing very well. Didn't have time to stream yesterday. Today looks like it'll be the only stream this week. I've been running around, and tomorrow going to head to BTC Prague. So very excited about that. Kuchar Brothers always put on a great show, becoming the biggest conference in Europe, basically, which was their goal. I'll do a presentation on Thursday, so I figured why not give you, my awesome viewers and friends, a little bit of a taste of what I'll be talking about. Some political stuff as well, but let's hold off the political stuff till the end, I think. So, I wanted to, in the presentation, and for the BTC Prague conference, this is coming up, from whatever the Hacker Day I think starts tomorrow. Basically, it goes through the weekend. BTC Pay is having a day on Saturday. The goal of the Kuchar Brothers was to get it, focused on legitimization, becoming mainstream, Bitcoin being a legit asset class for not just retail investors and small family offices, but for everyone, for hedge funds, TradFi. Of course, this is not an overnight thing. People have been talking about this for a long time, but I think it's a good goal for the conference. So in my presentation, I'm just going to do some basic things like I always do and hope that hopefully it, tweaks some noses. I'm going to show trends of different asset classes, okay? And when you do something like this, I think if you can just get through enough charts, it doesn't need to be that long, but once you see the overall trend, you'll know just as much as any Bloomberg journalist. So here's the S&P 500. I'm only going from 99, so you don't see the 99, the .com boom, but it was basically here. Topped out in 2000, went down eventually to 2003. Nadir, and same with global financial crisis, went down to March 2009. S&P hit 666 at some point. So now up above here. But if we look at from when the gold standard ended, which was 1971, but I like to get the whole decade in my analyses. So this is basically from the 70s on until today, the all-time trend, okay? See that we are above trend, and by about 800 points, we're above trend, okay? But I wanted to, and then of course another thing I'm going to talk about is what do these trend lines mean, okay? So this is where if you take the slope of this trend, it's a straight line on log scale, it's going to be exponential. And the slope of this is going to be constant growth. Exponential growth is what people in TradFi typically understand. And the 1969 curve is about 8%. You may recall I've quoted 7%. That goes back to the 50s. It's a little bit higher. If you look at the 1969 trend, 8%, but nonetheless, that's what it is. This is without reinvesting dividends, okay? But I wanted to then, layer on these charts where we can line it up with Bitcoin, because obviously Bitcoin started right here, interestingly, in the depths of the financial crisis. So let's just go from December 31st, 2008, so getting all of 2009 until today. What does that trend line look like for stocks? And there you go. It's even better. Again, we're cherry picking, but that's all people do when they make benchmarks and targets. But if you generally got into stocks post GFC, you'd have some pretty good returns. right around trend there. Okay, so 5,900 S&P, 5,800 is the trend. And the compound growth here is about 10%. 10%. So the green line is 8% return, black line is 10%, and then you can add basically 2% for dividends on top if you reinvest those dividends to buy more stock. These are about the best returns that you'll get in TradFi. Next thing, obviously, was gold. Wanted to talk about. So here's Peter Schiff's favorite asset. Just zooming in to make things hopefully clear. And this is how my presentation is going to look, by the way. So I have gold basically nadiring, bottoming out here from a 20-year bear. A couple $100 an ounce. Goes up to nearly 2,000 intraday. I think it does hit 2,000, 1,900. And then goes sideways for like 7-8 years, and now it's at all-time highs. Peter Schiff's loving it. This is the all-time trend. Gold over long time horizons has been, just as volatile as anything. Can go way under trend, can go way over trend, but this is the trend. And here, the slope of this green line is less than stocks, only 5.5% over 55 years. Now let's look at 2008. This is funny. So remember, stocks, we got a nice juicer because of such a depression, and if you're young and starting to invest, you actually crave bear markets. So that's what this happened. We got, basically 2 extra percentage points of yield on the trend line for stocks. Let's look what happens with gold if we start the trend line around the GFC. So it's flatter, more terrible. It's something like 4%. I actually need to go to my trusty summary here, which I don't have ready. But it's something like 4.1% is the slope of the black line, whereas the slope of the green line is 5.5%. Just pulling it up here really quick. Yeah, 4.1% is the slope of this black line. Well, again, we're shooting to all-time highs. That's great, but it's also, never financial advice, but it's also risky to buy an asset at its all-time high. And yes, Bitcoin is at an all-time high. But for gold, which has, put in pretty substantial trends over the last 55 years, no matter what Peter Schiff says, it's an exponential asset, compounds normally. Green lines gave you 5.5% year-on-year return. Black line only 4.1. It's just moved sideways, almost. Last 15 years. It's obviously something to think about when you want to talk about investing in your family portfolio. Doesn't mean it couldn't go higher for longer. Doesn't mean it couldn't pull these trend lines up. But these are very, the numbers that I'm telling you, the 5.5% for the green line, 4.1% for the black line, these are very long-term numbers, pretty stable numbers. Yes, if you had bought above the black line and sold below the black line, you would have made less than 4.1%. Conversely, if you had bought below the black line and sold at or above the black line, you'd made more than 4.1%. But 4.1% is nothing to write home about, nor is really 5.5%. Okay, now bonds. Don't talk about bonds as much. People quote yields all the time, and yes, the yields are finally moving back up. 10-year, a little bit higher than most officials would like. This is a total return USD index. It's a Bloomberg Barclays. I think now it's just called Bloomberg, but it used to be Bloomberg Barclays, and Lehman was running it for a while. This would really helps to sort of gauge general bond returns. You can see I have more data here recently, and here I only have, monthly or even annually figures. But nonetheless, we can still draw a trend. And remember, when bond yields go up, that means the price of the bonds, the value actually goes down. So though you are earning more in fixed income when bonds are higher, and it's better if you can time it right to come in at the right time and start earning that higher yield. But if you bought at 2% and now it's yielding 6%, you'll be losing quite a bit of money. The bond market is not priced the way the stock market is. So unfortunately, they don't do bond indexes the same way. It's more arbitrary. It's like, what bonds do you hold? Do you hold munis? Do you hold corporate? Do you hold federal government bonds, foreign sovereign bonds? But anyway, for the U.S. bond market, this is basically the longest term we have. It goes back to 1975. Okay, so not 1969, but 1975. And here's the trend. This is obviously through the huge bond bull that started in 1980. Remember, when yields topped in 1980 and then yields go down, the price goes up of bonds. So, this index was quite high here, or continued to march higher. And then as we moved into negative yields or 0% yields and low yields, the index flattens out because you can't juice it much more than zero. Europe has, of course, tried, and they've gone negative. But, and again, remember, when there's a negative yield, to make money, you got to sell it to someone who's willing to buy it for an even further negative yield. That's how bonds work. Okay, so, and then as rates go up now, you actually might be surprised. You'll lose more on the bond than you do on the coupon. So that's why you see this has basically been sideways here, even for the last, 10 years. So here's the trend. It's not a great trend. The bond trend is 7% since 1975, 7%. And obviously, this is less of an interesting number because we haven't hit that trend line in 10 years. Now let's do the 2008 trend. Looks damn near flat. The slope of the trend is 2.4% per year compounded. So that's bonds, U.S. bonds. Yes, it's only U.S. bonds, but it's the most globally, not globally, it's the most encompassing U.S. bond market index, also with the most history. So that's why I'm using it. And now money. All right. So again, this is my research. You won't find this anywhere else, but its global monetary base was only $2-3 trillion globally in 1999 in Y2K. Now we're 10x that, basically. 26.8 as of May. My last official calculation would be March. 26.2, which is even higher than I thought it would be, frankly, because in December it's 25.5. COVID top was 30 trillion. 30 trillion in base money. So let's look at the slope of this trend line in dollars. Slope of this trend line in dollars is 10.2%. You might recall I often use this figure 12.7%. That's the weighted average monthly growth compounded. Gets you to 12.7% of native sort of native weighting of each money. And here's just looking at the dollar values straight up. It's kind of confusing. Remember, it's Wittgenstein's ruler. There's 50 different currencies inside of this green shaded area. It's not just the dollar. It's not just dollar denominated assets. But a better way to say it is really central banks have tried to print 12.7% per year compounded weighted average over the last 55 years. But they've even lost value against the dollar, because when you put it all back into dollars, it only works out to 10.2%. It's a bit technical, but that's what happens. Now let's look at the 2008 trend of money. This is a bit surprising. Even to me, actually, this was surprising because I haven't run this trend line until doing this presentation. But obviously, the massive money printing in the big markets, primarily the United States, started in 2009. But the cooling off period here was really big, right? So let's just zoom into here, okay? So right before COVID, we were at 20 trillion monetary base. We went up to 30. 10 trillion is a huge amount of money, obviously, to print into the system. And it was probably even more if you did a percentage of that, because each native currency was printing a lot, but they were also losing value against the dollar. Okay, but now they continue to lose value against the dollar, and generally the dollar value is way lower. It's like 15% lower than the top, right? So it's 30, now it's down to 26 trillion. This is a big gap, big drop in purchasing power. Not purchasing power is the wrong word. A big drop in the money supply, which is intentional. It's why interest rates are rising. Theoretically, your purchasing power is improved, but ask people how that's really been going. And the slope of this black line is 8%. Okay, in dollar terms since 2008, 8%. So actually slower growth than the overall 1969 trend line. But the net of it, and I'll show a summary. I'm not going to do the whole presentation for you here on this stream, but I'll show a summary with stocks, with gold, with bonds, with money, also to GDP. You know, if you take all these different percentages and you just imagine what is the increase in supply or the price in all of these things, it comes to roughly 5 to 10%. In some cases, it'd be even way under it, like this bond curve is only 2%, 2.4%. In some cases, you'll be a little bit above it, like the stock curve, this one, the black line, is 11.4%. But generally, all the talking heads on Bloomberg, CNBC, they're giving you ideas and talking about companies that are in pretty much all of these sectors. Obviously, the S&P 500 picks up a lot. Of course, we could go bigger, Russell 2000 or whatever. $5 to 10% per year is the growth rate. Now, let's go back to money. Okay, so this one, world basic money growth. And let's revisit the idea of if money growth is the main driver of Bitcoin growth. I've talked about this a lot with the power curve, right? So here is the noisier or trailing 12-month version of this. Okay, so the smoothed out version, the 12.7% or 10.2% if you're looking in dollar terms. Again, I know it's a bit confusing, but this is all in dollar terms, is here. And the change in that in native terms is here. All right, so again, in the 70s, month to month, this is all turning it into it's monthly rates, but it's shown as an annual compounding. Okay, so what it means is basically 1% a month will compound to 13% per year. That's what compounding will do. But generally, you can see annual increase in the money supply at any given time, 13, 14, sometimes 19% here in 1983, sometimes down a little bit. This was the pricking of the gold bubble, in fact. And they only decreased the global money supply to 8-9% per year. Then a huge spike during Y2K. People took cash out like mad. And then a corresponding drop in the money supply the next year. Tried to cool it off after, 9/11. A lot of stimulus came here. Tried to really cool it off. And again, I'm not defending central bankers, but one could make the argument that this was just way too low here. It's too much here after Y2K 9/11, too much stimulus here, way too low right here. I'm not defending them. I'm just saying that one could make the argument. And of course, GFC happens and you have just massive money printing around the world. But remember, you might be surprised how this is flatter. The black curve is flatter. You can sort of see that here, right? So even though there was an initial push of huge, record, modern record, really probably all-time record, because it's at least most consequential global record. Obviously, this is the modern era we're looking at here. 33% per year they were printing, running at that rate twice during QE1 and I guess QE1 and QE3 probably. QE3 would be more here. Yeah, it's QE1, 2, 3. Because they stopped in the US at least by mid to late 2014. And then went down. Again, down, down, down again. Repo spike. COVID, lots of stuff. Massive spike back up again to 32% year on year. And now, after all their shenanigans for 55 years, we see these just very low numbers. Sometimes decreasing money, destroying money, sometimes increasing just a little bit. But obviously, this last 25 years is way different than the first 25 years. And they didn't even know what they were doing then either. But that's just what it is. So, I want to show this chart because now we can layer on the changes in Bitcoin and see how it looks. Okay, so I'm going to do that by market cap. Obviously, I've showed this before, but these are huge figures. I have to cap them at 160% per year for Bitcoin. But did Bitcoin's rise and rise and rise correspond with central bank money printing? This is central bank money printing, and this is the rise and fall of Bitcoin's market cap. I would posit to you that the first 10 years of Bitcoin for sure had nothing to do with central banks at all. Zero. Because here, yes, they were printing a lot in QE2, not COVID, QE2 and QE3. But remember, by 2014, Americans were doing nothing, no more money printing. The rest of the world was a little bit, but still on balance, weighted worldwide. It didn't really correspond with anything, right? Bitcoin was more corresponding to the cycles, to the halving, to the power curve, to adoption. From this point, it seems like we're maybe onto something. Okay, so after the halving in 2020, right? It's 2020. Into the next year, bull runs for Bitcoin into 2021, and obviously meme stock trading and everything else, stimulus itself, all lined up. So I think that's interesting. Also, you can see, money printing is being destroyed here. Bitcoin also gets destroyed. It's interesting, but I would still posit it's not. It's getting more in the picture, but it's not the main story. Okay, so again here, a little bit more money printing, but Bitcoin's already shooting up way higher than it was from its lows, obviously. So don't listen to Peter Schiff here. Listen to Bitcoiners. And here we go. So it's interesting also. Notice how you can see the tops of these bars, right? Because here you can't see anything because I'm maxing the chart at 160% per year. So we got thousands of percent Bitcoin change, of course. I mean, it's just so small. Thousands of, well, not thousands, but hundreds of percent here, leading up to the 27 top. And 2021 is a bit shorter, but still hundreds of percent. Now, interesting, we can see the tops of these bars. So tens or hundreds of percent, but not nearly as high as these. And even dipping off a little bit. I'm stopping this in March, by the way. So remember what happened in March. Obviously, we didn't even have Liberation Day. We had a bunch of hiccups. The price went down. Now it's back up again. So going to be interesting to see how this plays out in conjunction with global money. But as I pointed out many times, it comes back to this chart, which I think is probably the best way to summarize it all. We put all the global money in the green line, becomes a straight line on log scale. We can also do our trend lines out. Bitcoin trend line out, which is a power curve. So what you see is just much more adoption, general power network growth than a reaction to the money print, I believe. Good morning, guys. I have just checked the chat. Morning, Gio. Yeah, this is interesting. I mean, obviously I think there's this pinwheel people have shown, like there's two sides to these two wars, right? Are you with the Israelis? Are you with the Palestinians? Are you with the Ukrainians? Are you with the Russians? And now we have the Iranians. I do hope that this means less drones used on the field and sold to Ukraine. If you look at Jason J. Smart from the Kiev Post, he did a couple good segments on how the Russian capabilities are coming in and being highly diminished now. Russian capabilities because of the Iranian drones, North Korean drones, and Chinese kit, I guess, as well. But Chinese is very, very small in the proportion. It's really Iranians and North Koreans that have most of the kit that is going in. But I want to go back. Remember last week talked about Night of the Long Knives, how, you know, there's at least 80 people killed. Some numbers are much higher. Nobody was arrested. And we talked about that arrest, or it wasn't an arrest, but a takedown of a standing U.S. senator. And I said, hope for peace, pray for comedy. Unfortunately, in Minnesota, as probably you heard, we did not get that. Finally found the suspect. This was from Monday. Who killed Emerita Melissa Hoffman and her husband, and then really disastrously wounded. Sorry, that's Speaker Emerita. That's not Emerita, sorry. Reading fast here. Speaker Emerita. The Honorable Speaker Melissa Hortman and her husband, and sorry, this is why I don't break news. It was the other one that they injured. In any event, terrible. Hoffman and Hortman. Okay, and we saw this one from GOP Senator. This is what happens when Marxists don't get their way. Incredibly sad. I mean, we just don't have any humanity anymore. This is immediately, I'm sure if you've been on Twitter, you've seen, in this case, mostly the, you know, because this person was obviously a registered Republican, and Tim Walz said it was absolutely a politically motivated killing. But the fact that you would have a sitting U.S. senator write something like this is, again, in my opinion, incredibly dangerous, incredibly, like, disingenuous isn't even the word. Melissa Hortman and her husband dead. John Hoffman and his wife, Yvette, seriously injured. It's just unbelievable. Unbelievable. The comedy might have happened here. You saw the squeaky tanks. And this was, I guess, not even meant to be facetious. I want to reiterate, I am a huge supporter of a strong, principled military, and there's not much more to say about that than I probably already haven't said. But if you guys saw this, Flag Day, the Russian tricolor flying, this is very, again, scary. I don't really know what else I can say here. This was absolutely, it's absolutely not in any of the insignia or regalia or the history of the American flag. The Russian tricolor, the way it is drawn and colored, never shows up in America. So I would, anybody feel free to let me know. So again, just terrible, weird signs, probably from some weird sycophants. You can't celebrate Flag Day and then put the Russian flag on an American brochure. I just don't know what else to say about that. And you can't have murders in your country that are clearly politically motivated and then be mocked or be called a Marxist by sitting U.S. senators. Humanity is not looking good at this point. But I don't know your stance, Geo, but this channel I find is pretty interesting. If you want to look at the war in Israel, both from what was happening in Gaza and now Ukraine, it's actually this guy. He's a travel guide, but I think he's pretty good, and he's taken on a lot of arguments from the radical Muslim side, generally coming across, in my opinion, pretty strong. And here's finally a video, which I'm glad he made, which to me seemed like he was really connecting the dots from what I've tried to say all the time is, these wars are connected. You have Russia hosting Hamas. You have Russia having asylum for Assad, it seems now. Over the weekend, you probably saw the Iranian high officials in the Iranian regime are fleeing to Russia. So they're absolutely related. Israel is a much more, I don't know, just because of the history of the Jews, I don't know, it's just a much more, it evokes a lot more emotion for a lot of people. As you all know, I don't have a dog in that fight. And for us, it's about, Ukraine and Europe. And obviously it's a big Christian country in Europe, but I've said it a long time to a lot of people, these wars are connected. And no matter how you might feel about the plight of the Palestinians in Israel, which it is incredibly insane what they're going through, Israel's not going away, and Ukraine is not going to go away. They're going to keep fighting. Anyway, it's my little soapbox. I don't think we've hit Night of the Long Knives territory yet, but this to me was just shameful. Absolutely shameful. Good morning. Good morning, Bitcoin Light. Is that a comment? Is that a comment on the West Bank and Gaza, I presume? Yeah, I mean, it's not an easy situation there. I'm not going to claim that it's easy. Yeah, it's very strange because on either side of the political aisle, like the extremes, and now the hard right, you almost see them saying the opposite things about Gaza and Crimea. They're typically pro-Israel, so they're for. Well, I shouldn't even say that. They're not typically pro-Israel. Like if the Dave Smith people or these sort of neo-reactionary libertarians. They try to thread this needle and talk about how Gaza is a genocide and everything, but then they say that Russia should keep Crimea. So those people, I don't understand. Anyway, that was my soapbox for the weekend. Trump went to Canada, said the war wouldn't have happened if Russia was still in the G8. And then left. And I guess he called out Carney again because Carney said Macron said he was going back for working on ceasefire negotiations. And Trump said, that's not what I'm working on, leaving us all in suspense. If you think about like all through this period, seems like relatively stable growth, even if I don't agree with the growth of how they just print money to paper over problems. Then you look at what happened from here, and it's just doesn't seem like it may be ending anytime soon. So here's the power curve on the. Oops, didn't update it here, but here's the power curve basically through February. A little bit different than the price curve. Remember, the price curve is 42%. Trailing 12 on the power, 48% of market cap. But that smooths out basically what's happening with Bitcoin, and then here smooths out what's happening with fiat, 12.7%. This is native change in native units. So right now we're at a scale factor of 4 difference. Remember that fiat is on the left-hand side, Bitcoin is on the right-hand side, which you can't see. My ugly mug is blocking it. But you can see the scale factor difference is 4. 4 times different. Yeah, but I don't know, Gio. I don't know if you want to talk about it anymore, but I do understand, if you got the Iranian regime saying Israel doesn't have any right to exist, I understand their fear there too, because that's the same thing that the Russian regime basically says to Ukrainians. It's the plight of the Palestinians is that they don't seem like they have leaderships that will want to rise up for democracy. It's more. Don't get me wrong. I mean, everybody, you can't live in permanent occupation. It just doesn't work like that. It was the same with the Baltics. You can't live to be permanently occupied. It's not an easy situation. I don't claim to, first of all, be an expert or to say that there's an easy way out there. It's going to be interesting though if because there's no inherent reason yet for central banks around the world to start printing money again like they did during the pandemic here. And so it'll be interesting to see how this plays out, right? So if let me take off the averages so I'm not confusing people what we're talking about. They're just generally not printing money still. Right? Monetary base is down 15% in dollar terms from what it was at the height of COVID. It's totally possible that we go through a high here and this just doesn't react. It's also possible that we maybe have a delayed spike or peak in that Bitcoin price, and then eventually, it feels like we're on the precipice of more stimulus being needed, mostly because of instability and war. Again, I'm not saying that's going to happen, but everything feels like a powder keg at the moment. So perhaps that could be the impetus to bring this stuff back positive. But so far, Bitcoin is not aligned up in this cycle with money printing. You mean like in the 1920s, depression of the 1920? Depression of 1920, the Fed, yeah. I think that's true. They also didn't have as big a stake in the government as they do now. But yeah, Tom Woods has popularized that a lot, the depression of 1920. I think there's a lot of merit to that discussion. Often, regulation A causes unintended consequence B. Then we put in regulation or law B, causes unintended consequence C, so on and so forth. Another danger, it seems like, for America is as inwardly as they are turning, which is fine to turn inward. Again, I would caution when Ukrainians are, as I've always said, being bombed with Iranian drones, Chinese kit, North Korean soldiers. It's not necessarily something you might be able to isolate yourself from. Nonetheless, the issue with America right now is they're turning on themselves. I mean, this just can't be real, and yet it is. Or you can't have empathy for someone that was, family that was just shot and died and nearly died. 2 families. Also followed up by saying nightmare on Wall Street. Incredible. Absolutely incredible. Saw Macron went to Greenland. Anybody like that? Here's a little bit more geo for what you were saying. This chart hasn't changed, so, updated in a month, but it's monthly change. But if you look back to the beginning, take this off. Very small holdings of the central bank as a function of the federal government. JP Morgan is a much bigger player than the Fed and what's happening here. Didn't really start to get involved until here. Great Depression, World War II. And arguably, I think, like you said, it's a logical point. The more you get involved, even if it's genuinely for good reasons, the more things can maybe spiral out of control. But I don't like those arguments too much because I think it takes away some of the other agency that other, bad actors do and have. Like, I don't like the argument that it was just hyperinflation that turned, the Germans into a Nazi state. I'm not saying they didn't have a part of it. Absolutely did. The reparations were terrible for them after World War I, as were the attempted reparations on Ukraine, although they finally got a normal minerals deal signed. But U.S. is apparently pulling troops back, so not really sure why they even needed a minerals deal. Also, Geo, I think, the Palestinian issue is one thing, but the Iranian issue is a whole other thing. And if they can be taken out and less of their capability goes to Russia to kill Ukrainians, that's great. But strong deterrence, strong defense just doesn't seem to be the topic du jour, right? It's more about preemptive strikes, rightly or wrongly. In the case of Russia, absolutely wrongly. Making up that, Russia's vulnerable from Western European attacks. And they just attack Ukrainians and steal their children. Saw another headline that, Russia is going to turn maybe 50 children that they stole in the beginning in 2022 for Russian soldiers that have come to kill Ukrainians. So it's a standard thing for Russia. Russia returns innocents and they get back murderers. Although I understand it's hard to necessarily call troops that way if that's what the state is telling them to do. But obviously, as we talked about before, that's what happened with Brittany Griner and a lot of these deals. Vladimir Karamurza, these people that were traded over for KGB agents and killers. And brutal days. Maybe too sobering. before the BTC Prague. But anybody, let me know if you're going to be in BTC Prague. Try to drop some mainstream TradFi knowledge on the conference. We'll see if I succeed. But if anybody's there, wants to hang out, let me know. Ping my email. Would be happy to meet. Power curve dominates. Doubles every 12.7% increase in Bitcoin's life. To me, that's really the story, what's happening right now compared to the money print. Money print is a part of it, but it's just a much less part of why Bitcoin grows. So, great. Yeah, it's a great one. It's a great town, great people. Prague is just an awesome city. It's a little bit pricier, slightly, than Baltics, and bigger, becoming more Western Europeanized. But I really enjoyed the show. So I guess with that, guys, I will say farewell. This is all for me for this week. Just too much to do otherwise and some traveling. But maybe I'll try to tweet more. Download Twitter to my phone. We'll see. I refuse to be an influencer, which I'm definitely not anyway. I don't feel like one. So follow the power curve. Be kind. Have empathy. Thank you, Gio. Thanks, everybody. Appreciate it. Have a good week. Talk to you next week.